Hello and welcome to the Events Podcast. I'm your host, Dan Taylor, and each week we bring you interviews with event professionals and we help you build your events empire by showing you how to run a business around live events. We've got listeners who run small meetups for their community. We've got people that run large conferences. So we're really focused on anyone who's running events and helping you make money out of them, get attendees, and use it to grow your business. So I'm coming to you today. It's Wednesday, the 15th of May from a rainy Prague. And I want to bring you an interview we recorded beginning of the Events Podcast with a guy called Steve Monnington. And what we talked about is how to sell your events company. Now, this is a hugely interesting topic for a lot of people. Maybe you've built up a conference or a large group of meetups. Maybe you've even gone as far as doing a trade show or some live events, music events. And maybe you want to think, can I even sell this business? Maybe you don't want to keep running it. Maybe you want to pass it on, get someone else to take it over and obviously make some money. So Steve runs a company called Mayfield Merger Strategies, and he specializes in helping people sell their events company. So hugely interesting episode for anyone running an event to learn how you could maybe even sell your events business. This episode is sponsored by EventsFrame. That's a company I'm a partner of. It's event ticketing done right. If you're using Eventbrite right now, you're probably paying close to 4% of every ticket fee. And with EventsFrame, you can run an event for as little as $39 for the whole event. So it connects to PayPal, Braintree, or Stripe. It connects to all your favorite email marketing softwares, really amazing integrations, even with webinars. You can create whatever discount code you want. You can create your own website, or you can even embed EventsFrame in your website. So please, if you're a listener of this podcast, I'd really love you to check it out. And please send me an email with the subject line podcast. My email is dan@eventsframe.com, dan@eventsframe.com. Put the subject line podcast, and I'll give you a special discount code. So again, I really want to thank everyone for listening. If you enjoy this podcast, please just tell one person about it. We're growing every month, and that's amazing to see. And it really kind of makes me feel good about spending all the time, because it does take a lot of time to find guests, to edit the podcast, to focus on getting actionable tips, obviously to do all the graphics and everything else. So if we can keep growing the podcast, it makes us more motivated to keep doing it. So please, if you could tell one person or leave us a review, it would be really amazing and you would have my eternal gratitude. So again, thanks a lot. And here is the interview with Steve. Hi, and welcome to the Events Podcast. Today, I'm delighted to be talking to Steve Mornington, who's based in the UK and from Mayfield Merger Strategies. And they're, from what I can see, effectively a business broker. They do M&A for exhibitions and events, and they operate globally, and they work on deals between people selling exhibitions and trade shows. So I hope I haven't got that wrong, Steve, but welcome to the podcast.
Thank you very much. No, I think you explained that quite well, probably far better than I normally explain it.
Where are you located, actually, Steve? I know you're
in London.
In London,
in London, yeah.
Great. We got introduced by Stuart Bailey in Hong Kong, who's a mutual acquaintance. Stuart runs a large, I know him through, he does a few things, I think, but I know he runs a Learning and Teaching Expo, which is a big education technology exhibition. Yeah. And he introduced you. It's interesting because, I'm coming to this from the point of view, I've run quite a few conferences and training events, but kind of on a smaller scale. So I'm interested, to see a bit more about the larger events and what the market is, because I think that's more what you deal with.
No, that's exactly right. And I think that, I've known Stuart for quite some time, and I think he's a very good example of how the exhibition industry works, because nobody ever leaves the exhibition and events industries. Yeah. They just get recycled. Yeah. And so, my background originally back in 1989 through the mid 90s was working for an exhibition organizer called the Blenheim Group, who grew by acquisition to become the world's largest. We sold it to United News and Media, now UBM, for what was then around about $1 billion. And everybody basically left and went off and did their own things. Yeah. But almost all of my peer group from that time are now in very senior positions, still in the exhibition industry or events industry in different countries. So, you're always coming across people who you've known 10, 15, 20 years ago, generally in another position. And I think that Stuart's quite a good example to use about what's happening here, because, up until recently, he was working with Diversified Communications in Asia, who decided to sell their business. And like many organizers, he now runs his own business. And at some stage, having developed the events that he's got, he will presumably sell those to another larger exhibition organizer, and see a healthy increase in his bank balance. And I would say that our clients fall into two categories. Overwhelmingly, it's entrepreneurs like Stuart who have set up their own business. Often they've worked for big exhibition organizers or big event organizers. They've seen what other people can do when they go out on their own. And I think the cash flow characteristics of the industry are helpful, in that you collect all of the money before the event takes place. So that allows entrepreneurs to cash flow the development of a business. And most of our clients are entrepreneurs who've done that, who've developed the business to a particular stage, and then either they want to cash out, or they want a partner to take them to the next level of growth, or occasionally they want to retire. I mean, there's lots of reasons why people leave, but that is the lifeblood of the exhibition and events industries. So if you actually look at most of the events that the big organizers like Reed, Clarion, Informus, UBM, ITE, Tarsus, Comexposium, all of these people, almost every single event that they run has been acquired from an entrepreneur.
Right, that's very interesting.
Yeah, so the launch ability of these companies, of these big companies, is far less than you might think from looking at it from the outside. They're quite risk averse. They tend to put a lot of barriers in the way of their staff launching shows. They make them jump through hoops. Whereas entrepreneurs, even though it's their own money, tend to be more nimble, tend to be more in touch with the industry and the sectors which they're serving.
Yes.
So I gave a keynote speech at the Australian Association of Exhibition Organisers a couple of years ago. And I said that without entrepreneurs, you actually wouldn't have these big organisers, because they're the ones that create and feed them. And that's why the M&A sector is really so buoyant right now, because you've got a large number of organisers, some of them private equity backed, who are looking for fast growth. And the fastest way to grow is to acquire something that has already has been launched, rather than go through 3 or 4 years of building something up and having the risk that it's not going to succeed. Definitely. So that's what's driving the dynamics of the market.
Great. Just to jump in at this point, just to get some basics down, in terms of terminology, because people seem to use exhibition and trade show interchangeably. Are they different in your mind, or do you normally refer just to exhibitions?
Well, exhibitions can be trade shows or consumer shows. Right. I mean, there are. I think at the very basic end of this, you have trade shows which are business to business. So your exhibitors are manufacturers or service providers, and your visitors are people who want to buy services from them. You then have a lot of consumer shows where the attendees are the general public. And there are far fewer of those that change hands in our world, because they tend not to get scale, and they tend to be very localized. And
I imagine sponsors would probably, like the exhibitors, will probably pay more for a B2B type thing, because just the general mechanics of business mean that B2C is generally like more customers and a lower price point, I'd imagine.
Yeah, I think that's right. But they're more susceptible to weather, to transport strikes, to all sorts of things, because you go to a B2B show because it takes place once a year.
Yeah.
That's where you go to get ideas, to place orders.
Yeah, you plan your year around certain events. People do for sure.
Absolutely. And on a B2C show, people go for a day out and they may decide that they don't want to if the weather's a bit cold or if it's going to be hard to get there. So we don't, we very rarely get involved in B2C shows. And although they do change hands, and there are some B2C organizers, people like Ocean Media, people like Upper Street Events, River Street Events, Media 10 run some consumer shows. Most of the action in terms of buying and selling businesses are at the trade show end.
That's interesting. Now, what about at the lower end? Lower end in terms of attendees, in terms of conferences? Because, for example, I can give you like my example. We run a lot of conferences focused on education technology, and one or two events we're running, we're getting more and more exhibitors. So even though it's we've got multiple sessions going on, we could grow that side of it to make it, because I mean, some of these exhibitions have kind of a conference element, don't they? And some are just purely a trade show. It's just purely a bunch of booths. But some of them, there is kind of a mix where you can attend sessions as well.
It depends on the sector.
Yeah.
There was a big exhibition on this week in Hanover called Euroblech, which is the main world exhibition for sheet metal working. Yeah. And this was 70,000 net square meters of exhibition without a single education session anywhere at all.
Right.
It was like it's really old school. Because people come to see machinery, they come to place orders, they don't need to learn about anything. You contrast that with some of the events which are run by organisers like Closer Still Media, for example, who run events, pharmacists, for vets, for dentists, and also a number of tech shows where education is absolutely key.
Sure.
And that's where the model is changing. So the model that they run is quite a disruptive model, because if you take, for example, the veterinary sector, all the vets require a certain number of hours of continuing professional development every year, CPD. And what Closer Still offer is a high level of content in order to fulfill a significant number of those CPD hours, but they do it at almost no cost. So it's either low cost or no cost. Yeah. And as a result of that, all of the vendors, all of that community want to come to that event. As soon as you've got all of that community at that event, then all of the vendors for that sector want to come and sell to them.
Yes.
So what you actually create is not an exhibition with a couple of seminars, nor do you create a big conference where people are paying £1,000 to attend and are coming out of the odd session to have a look around the small number of sponsors that are there. But you've actually got, 4 or 5 conference tracks on the show floor where people will come out and there's a real buzz around the exhibition. And what you create is almost a 50-50 conference and exhibition. And that, when education is involved, like for technology, like anything in healthcare, those are the models that are working now, and those events can legitimately compete with the big events which are run by the associations for those industries. For example, if somebody, particularly if somebody from the National Health Service wants to come to an event, they're not going to be allowed to go to an event that charges £1,000 for them to sit in seminars or a conference program for 3 days. They will go and they'll pay £50 or £100 and they'll still get the content, but they will get to see all of the rest of it.
Definitely. I mean, the area I know best, which is education technology, is similar to how you described it. Like the biggest event, I mean, the biggest one I know of, which is ISTE in the US, that's basically a huge trade show and a huge conference. There's I don't even know how many tracks going a lot, but it's it's interesting because teachers have a similar requirement for getting so many hours to, at least in the US, they have to maintain their teaching certification state by state and do so much. It varies. I mean, obviously the Stewart Show, there's Bet in the UK, which is much more of an exhibition with very few sessions, and free to attend. But generally speaking, the education technology ones have a mix somewhere down the middle of exhibitors and conference sessions.
Yeah, no, I think that's right. And what the businesses that sell best, if we bring this back to the acquisition side of things, the businesses that sell best are the ones that engage the community, whatever that may mean. Yeah. So it's actually quite hard to sell a conference business these days. A business which has got 50 conferences a year in different cities, a bit kind of sausage machine-ish, people just churning them out, and a very, very high turnover of delegates from year to year, limited number of people with stands, and the only people who have stands are sponsoring the event. Those as a business model are quite hard to sell.
Now, is that because with an exhibition, most of the revenue is from your exhibitors, from your sponsors?
Yes.
Basically?
Well, it is. And then you get, if you can get high retention rates from your exhibitors and you can resell on site, re-sign people on site for the following year, then you get some form of continuity, where if you're running a conference of 300 people with 12 sponsors, it's almost like you're starting again every year.
Yeah.
We get asked all the time to sell people's businesses for them, and we generally turn down quite a few more than we take on. And if people come to us with the old classic conference model, we don't go near them, to be honest, because they're really hard to sell.
That's very interesting. I mean, the people listening to this, I guess, is a mixed, right? I'd say, like I said at the beginning, most people would be on the smaller end, I think. But I'm sure, have you seen people build a conference to become an exhibition? Like they've got a lot more exhibitors and they've grown it to that kind of level? Oh,
yeah, absolutely. And, if we just go back to Closer Still Media again, I don't want this to be about them, but, a lot of the events that they have created are launches, and you have to lead with the education. It's actually quite hard to start with a fully paid conference with a small number of sponsors and build that out into an exhibition. I mean, people have done it. I mean, I remember that Informa created, the 3GSM conference, which was massive, and then the association ultimately took it back. But that started life as a conference and grew into a massive exhibition. So there are quite a few examples. It's got to be in a sector where the vendors tend to be big brands, tend to be very active, and that you have a very strong community with a hook. It's not enough to say, let's get 300 people on an interesting subject and they'll come for 2 days and then they'll go off and forget about most of what they learned. The whole point around the continuing professional development and the hours that people need seem to be the key to building a valuable exhibition stroke conference.
That's fascinating. So the companies you listed, like Reed and these other large exhibition companies, there's also a bunch of companies that run a lot of conferences, like Marcus Evans and these kind of companies who run. Now, is there any overlap between these, or are these generally two separate types of business?
Yeah, they're generally two separate types of business. I mean, there've been companies that run events on boats. And Marcus Evans is a great example of a business that runs a lot of conferences with a very high turnover. Yes. of a churn rate, very high turnover of delegates and sponsors, and they have a model and it works. Whether people would buy that business today is debatable, but they make good money. Yeah. IIR were the pioneers of that type of big event. Irvin Laidlaw, who launched IIR many years ago and sold it to Informa for several $100 million. I can't remember exactly how many. And IIR is still one of the brands of Informa, particularly in the Middle East.
Yeah.
And they paid an enormous amount of money for that business, which was a whole collection of smaller conferences. But I think that was of its time. And I think,
yes.
I think if a business like that came up for sale today, Informa wouldn't buy it, because, they're focused on things which have a higher degree of stickiness, and repeat business.
So let's say someone's listening to this and they have an exhibition which is growing. Like what would be their starting point if they were thinking of selling? Obviously, speak to you would be the first thing, but like can we talk a bit about what the process is and what the kind of typical valuations? I read you had a very interesting article about how much is your exhibition worth. Could you talk a bit about the process and what kind of valuations these events are getting?
Yeah, so I think the starting point isn't necessarily to call us. I think the starting point is to decide on the timing, and the timing is absolutely critical. And in the past, what we have found is that entrepreneurs tend to hang on to their business for too long because they can't bear to sell it with growth left in it. And that's the time
you should be selling it. Yeah,
exactly. The moment it's tapering off, when it's flattened out, when it's starting to decline, when you've got too much competition, is when it's too late. So people need to look at that. What we're finding at the moment, though, is because there are so many transactions happening, because there's so much money around. Some people are launching events specifically just to sell them.
Yep.
So we're getting approaches from people who've launched a business, run it for a year, and then expect to get a double-digit multiple and then leave and go and do something else. And that's quite a kind of millennial approach to things. And we have to explain that, it's just not going to happen.
It must be tough as well because generally, most events, it takes a couple of years to get some momentum because the people are kind of suspicious about a first-year event. From what I've seen, people don't know much about it or anything about it.
Yeah, I mean, because you don't know whether it's been accepted by the market. It hasn't got a proven revenue model, but that doesn't stop people trying to do it. So I think for anybody listening to this, the key point is timing. And the events that sell successfully for a lot of money tend to be ones which have been created because people feel passionate about that sector, because they understand that sector, and because they have created an event that people want and that it's run for at least 3 years. And then it's proven itself. It's got a growth profile, and then they can start to look at either selling it or partnering with somebody and selling a stake in it. Years ago, we sold an event called Counterterrorism Expo to Clarion. And the guy who had launched it was a guy called Peter Jones, who runs a company called 19 Events. They run the main security event in the UK now. And he approached us to say, I've launched this event and I want to invite buyers to the very first edition. And we thought he was mad, but that's what we did. And we said, here's this event, we're selling it. It hasn't run yet. It was so successful that we actually had 4 bidders for it. But the difference between that and, selling events which are normally selling events that are in early stage is that he was prepared to stay with the business for 3 or 4 years. So he sold 60%, I think, and then he sold the rest 3 years later, and he worked with Clarion to develop the event. So in situations like that, you can sell a little bit earlier.
And I guess he had a track record as well.
He had a track record. It was in a sector which was clearly growing rapidly. He tapped into all of the things at the moment around terrorism, terrorism attacks and so on. But in general, don't think about selling your event until it's run at least 3 times. And if you do want to make serious money out of it, sell it to somebody while there is still growth left in it. And finding that middle point between the too early and too late is actually quite tricky. So one of the things that we do when people approach us is to advise them that maybe they should wait another year, for example.
And what's kind of the range of valuations? Is it a multiple typically of profit or of revenue? Or how are these exhibitions typically valued?
They're valued as a multiple of earnings before interest and tax and depreciation, what we call EBITDA. Yep. So basically your profit before tax. I mean, very few exhibition companies have anything to depreciate. So it's generally, your bottom line profit before tax. It's a multiple of that. We don't see businesses sold on multiples of revenue today. It may be expressed as a multiple of revenue, but actually it's been worked out ultimately as a multiple of profit. I get less hung up on multiples than a lot of people because I want to know what it's a multiple of. Because if you sell a business today, I had an example of somebody in Asia who told me that they'd sold an event, they'd sold it themselves, they hadn't worked with a broker, and they'd got a great deal. And they sold their business for a multiple of 7 times profit. And I said, well, that's not bad for a small event. And then I looked at it, and it had run twice. And the following year, it was forecast to grow significantly, double in profits. Right. And I said, so have you just sold it on last year's profits, or are you selling it on next year's profits? And they said, well, no, we just sold it on last year's profits. Rule number one, when you're selling a business that's in early stage, that's high growth, particularly if you've sold in most of the exhibitors for the following year, is to negotiate what's known as an earn-out. So, if you take that multiple of 7 and your business makes £100,000, then, ostensibly that business, the enterprise value of that is £700,000, 7 times 100. But if the following year it looks like it's going to grow to £300,000, then you want that multiple of 7 on the growth as well, paid out after the next show. So, you want £2.1 million for your business, 7 times 300 rather than 700K. So yes. It's about what it's a multiple of rather than what is the absolute multiple. And there are lots of ways of maximizing value by selling, by earnouts, by selling a stake now and selling a stake later, which often result in a much, much higher multiple than the one that appears on the, at the outset. And so I don't place a lot of store in what multiples businesses go for. It's more what the overall structure of the deal is and what the growth profile is and when the payments come through and what they ultimately get for that business.
Yeah, I mean, obviously there's a big variation, but what's a typical deal? Does a typical deal that the founder will have to stay on for an earn-out for so many years, or do people ever just sell the event and walk away, or how does it? I'm sure there's a big variation, but what are the most common ways this goes down?
Generally, people at the very least will do a period to help integrate. These days, if it's an early stage event, which depends on the guys who are running it, you generally can't get away with selling 100% and walking away, or even selling 100% and leaving after 6 months. The big organizers who buy these events want to continue with the expertise, and they want those people to have some risk, to have what we call some skin in the game. Yeah. So, selling 100% is very different from selling 60% now and 40% later, or 70% now and 30% later. Yeah. And actually, the big organizers don't mind if they end up paying more money for a business if they've got the founders there working with them on the development for a couple of years, and then they then buy out the minority stake of, for example, 30%. If that ends up costing them more money than it would to buy 100% at the start, they're perfectly happy with that, because what it means is that the business has continued to grow. They have transitioned between these guys and and their own teams, and the business has grown well in the intervening period. So everybody's happy.
Right. So do typically buyers want to? Would a normal deal now that they acquire, say, 60% now and then 40% based on certain criteria, or do they sometimes just buy 100% straight away and the founder has to stay for the next year or so?
Well, people will buy 100%, and that tends to be more, a big organizer selling, a fairly chunky deal selling to a big organizer. Sure. So, for example, one of the biggest deals of last year was a business called All World, which was the largest privately owned organizer in Southeast Asia. And they sold their business for just over $300 million to UBM Asia. And, that was a very strategic move for UBM. But the guy who had run it, it was a family-owned business, which he had worked with his father, and then he ran it himself. They wanted to sell 100%. He didn't want to stick around. I think he probably stayed around for about 3 months. Right. But the buyer knew the business well. They were into, UBM Asia knew the business well. They were very competitive with it. A lot of integration, which is actually still going on. But in that type of situation where it's a very strategically linked business to the business that the purchaser owns and competitive in many areas, it's actually much better to buy 100% and just get on with the job of integrating it than it is to acquire 60 or 70% and have the founder still sitting there trying to run the business for you.
Interesting. And does the acquirer typically buy the intellectual property, or do they buy the actual company, or does it all depend if it's if the company's in a different country to where they're based, they'd rather just take it on?
In most cases, people buy the shares of the company. Right. Particularly in the UK, if you're an entrepreneur selling, you want to take advantage of entrepreneurs relief, and you get your first £10 million of gain at 10% rather than at normal tax rate. So you can only do that if you're selling the shares and you've owned the shares for a minimum of a year, which is now in yesterday's budget has been increased to 2 years from April next year. Right. But a lot of the buyers prefer to buy the assets, so they prefer to set up a clean company and transfer the assets in. So, assets, they're all intangible, they're trademarks and databases and stuff like that. And they prefer to do that because they're not inheriting a company with other things in it, with maybe a trading history. It's easier because, they can sidestep any past liabilities. So there is a bit of a mismatch between what the purchaser wants and what the seller wants. But generally, when we structure a deal, we structure it to be the most tax advantageous deal for the seller. And then the buyer has to, then we work with the buyer to minimize their risk, bearing in mind that structure. But it tends to be, for smaller businesses, it tends to be a share deal.
Great. So to finish off the sort of business questions, what's the outlook like? Like for anyone listening to this, we're recording this in October 2018. What do you see like for people running events, getting them set up now, 2019, 20, 21? What do you think the outlook is like? Do you think it's going to be easy to sell events? The multiples are going to go up, or what do you think?
I don't think multiples are going to go up because they're already at a high, which some people are finding difficult to justify. Multiples in the past, whenever anybody used to say to me, what's the multiple range? I used to say 5 to 7 times. Now it's probably 7 to 9 for smaller businesses. Yeah. And for good big businesses, you see multiples of 10, 11, 12. All World went for 13, I think it was. But that's a massive business. And what's driving that is private equity money. Right. So, private equity money comes into play in 2 ways. One, there are a lot of private equity owners of existing exhibition organisers. So Blackstone own Clarion, Charterhouse have a 50% stake in Comexposium, Onyx owns 65% of Emerald, who are the largest US organiser. Living Bridge own Upper Street Events. Lonsdale owns Ocean Media. There's a lot of private equity ownership around.
Right.
And they need to grow because they're not like a Reed or an Informa where they'll just continue to trade year after year. They have a time horizon from buying in to selling out. And in that time horizon, they have to deploy as much capital as possible to develop the business. The easiest way is acquisitions. So they are out there companies like Blackstone and the like have actually driven up multiples because they're quite aggressive when it comes to acquisitions, and their view is if they can buy on a multiple of 9 and exit on a multiple of 12, what's not to like? Because they get that margin. That makes it more difficult for the trade show organisers like Reed and Informa, who don't want to pay 9 for a business. They want to pay 6 or 7 or 8. But if they're going to be competitive in a process with the private equity owners of businesses, then they have to pay higher prices, and that's what's driven multiples up.
But do you think it's going to continue? Do you think it'll stay the same then? Do you think it's like, is it a good outlook? Is it a good outlook now if I'm thinking to sell my exhibition in 2 years? You think, okay, that's great.
Yes, it is. As long as private equity are around, and the other area of private equity are the companies that want to get into the business, brand new, buy a private company as a platform, develop it from there. All of that money that's around and that desire to get into the sector because of the strong points of cash flow and so on and so on will ensure that, first of all, there will be ready buyers for good businesses, and secondly, that multiples will hold up.
Fantastic. Well, look, I know we're getting close to time, so that's fascinating to me. I'm curious, like, obviously you're doing deals all across the world. Do you travel much, like, in terms of how you run your business? Do you run it all from your office in London, or do you actually go out and visit these events in different countries?
We have to go out. So I'm off to Indonesia on Friday because I've got a couple of projects out there. Yep. I spent up to 6 weeks at a time in China over a 2 or 3 year period to build up our business there and to sell a number of businesses out there and in Southeast Asia. You can't do it sitting in an office in London. It's exhibitions and events are face-to-face events, and selling them and having the relationship with your client is also a face-to-face event.
It's true. I've noticed just with my own events, with apps events, face-to-face is everything, and it's like the relationships. And I'm sure I probably could run my business without traveling, but I don't think it would have grown anywhere near as quickly without the relationships.
No. We have no choice. If we want to be working globally, we have to be out there. Doing stuff. So it involves a lot of travel.
Yeah, which I like. I like travel until the point. Certain times it becomes too much. When, like, recently I've done a lot and I've kind of had enough of it. But then if I go a month or two without traveling, I'll kind of look forward to it again. That's how I see it.
Well, I think it depends where you're going. If you wake up on a rainy Tuesday morning in Xi'an in China and the pollution levels are unacceptably high. Then it's probably not the best place to be. Where if you could be in Dubai or somewhere else instead. So
definitely.
Anyway.
But look, that was fascinating, Steve. Thanks very much. I really appreciate your time, and all the best. And thanks very much for the chat.
Do you want to sell more tickets to your amazing events? EventsFrame event ticketing has been built to minimize the amount of time it takes to buy a ticket. Result: you sell more tickets. Check out eventsframe.com